Hello, Warriors. Good NFP day to everybody. Nice comment, Matt. Good morning, Dale, Blake, Steve, F18. It's my first time being here live. Thanks for all of the work you guys do. You're very welcome. Our mission is to build up and edify traders every day, Matt. So glad that you're seeing value added to what you're trying to accomplish. Conrad likes my tie. Conrad, I'm wearing this tie because I'm standing in solidarity with all Americans looking for a job or a career of their dreams. The career of their dreams, as many of us have as traders. Do you agree? I'd also like to welcome the viewers from investing.com that are streaming our webinar, The Best Social Trading Community on the Net. Draghi Day, yes. Okay, so I want to start off with, before the NFP, as you can see, many patterns in play have been closed out. I look at the NFP as being a day to be flat or barely in a position and not trying to predict it, but ready to react to it and execute if opportunities set up after the number. As you can see, all these patterns in play were closed in the green. Congratulations, ForexAnalytix team, for a great week of trading. Okay, let's get to some of the markets here. A couple of opportunities and some things that I'm looking at. Oh, you don't see it. Okay, you're right. Thank you, Blake. Waiting for next screen. Okay, just to show you guys, these are all the patterns in play. In case you, and I know everyone knows when we close a trade because you get the push notification, and if you're not at home, and if you're not at home, you're going to get it pushed to your mobile device, your phone, your iPad. So very good week for us, for subscribers to ForexAnalytix.com. Didier, nice to meet you again. Face, welcome investing.com viewers to our community. And investing.com viewers, FACE stands for Forex Analytics Community Experience. FACE is the acronym for that. So let's take a look at a couple of markets, and I'm going to pass it over to Stelios. He has some comments on the Fed and the BOE. Just want to talk about the pound, which is something we identified early in the week. I said at least keep a half position into the BOE. So if we get a weak number and the pound rallies back towards the 32 level between 180 and 32, it could be a potential trade with stops over the high of the move made from this week. I think Steve would say this is impulsive, and now we're just chopping around trying to work off the oversold condition in time rather than price, but perhaps this gives us an opportunity up here to sell it. I don't think this will be the low before we make a new high. Give me a Y if you're with me. And then Blake was talking about USD NOK earlier in the week, thought we had a third drive to a bottom. That really didn't happen because we need to elect the stops under this low. So we're in this very tight boot or wedge in the NOK here. So I'm going to be looking at it if we get down towards 78.40. And remember, you don't have to do anything today. No one's putting a gun to your head to trade on Fridays. A lot of people do not trade after the NFP. They wait for things to reset into early the following week. So just keep that in mind. If you don't have a plan, no impulse trading allowed. Give me a Y if you agree with me. No impulse trading allowed. Okay. I know because I've done it. If you don't have a plan and you haven't thought things through before the number and have all your areas written down and ready to move or on your screen, don't fall prey to being afraid that you miss something like FOMO, fear of missing out. Because you know what, traders, we all miss trades every day. And you know what, that's okay, because there's always another trade around the corner. And with that being said, I'm going to hand it over to Stelios. Can you take it, buddy, or do I need to pass it over to you?
Hello, hi Dale. No, I don't actually need the screen. Hi everybody.
Okay.
I don't need the screen. I just need to make just a few points on the Bank of England because I am currently on holidays, but I missed the webinar yesterday, so I wanted to come in and just give a few points that some of my thoughts basically. So yesterday we had Super Thursday. Starting with the interest rate decision, the July meeting split, as we all know, was 5-3 in favor of not hike, but the well-known hawk Christian Forbes has since left the MPC. So the split yesterday was widely expected to be 6-2, although there were some whispers about Andy Haldane, the chief economist, switching to a hike. That was always a low probability chance, and actually did come in at 6-2. So that was not really much of news. On the quarterly inflation report, however, there were a couple of changes. The growth forecast was lowered marginally from for 2017 and 2018, 0.1%, I think. Market didn't take that too well, but we have to take a step back and see what that means. It just, in my opinion, just shows that the Bank of England is a little bit more cautious for the next couple of years. But for all intents and purposes, the forecasts, 0.1 here, 0.1 there, they're more or less unchanged. They are now forecasting inflation to hit its peak quite soon and then start reducing towards a target, which is 2%. They think that this current level of, it dropped from 2.9% to 2.6% last month. They think it's an outlier, a temporary outlier that is going to start following downtrend from here. Are they right? I don't know. It's hard to say, but I don't think inflation is going to go straight down to 2% like they're projecting, but it remains to be seen. But the main event yesterday was basically Carney's speech afterwards, and although it didn't give any big surprises, it showed a little bit of insight on how the Bank of England approaches the main issues. So a few things that Carney said, which I thought were significant, were the following. The first one, he said that rising inflation is only due to the depreciating sterling, the currency. It is true, but it's not the only reason. So I looked at that statement and I thought, this is dovish, because it says basically that they are less urgent to raise rates due to high inflation if they think that inflation is only from the depreciating currency. So that's dovish as a statement. On the other hand, he also said that we may need to tighten more than the markets currently expect, which is a hawkish statement, although he's been saying this for a couple of years now. So, this is on the other side. The other thing he said, which I thought was important, is that Brexit uncertainty is hitting businesses, and also that some bosses are refusing pay rises because of Brexit. This, on face value, you could look at it and say, oh, this is not good, this is dovish for the pound. But on the other side, if you think about it, this shows that there is some, trap potential ready to be unleashed when negotiations start properly, they start yielding results. If uncertainty slowly gets lifted, then I think the UK economy might actually perform better than the market is currently expecting. You can't be sure, of course, but I just feel that there's this pent-up energy waiting for the uncertainty to go away. And it's a similar thing. I know I'm Greek, and it's a similar thing in Greece. There is a lot of uncertainty here in Greece, and I know that there are companies and investors waiting for this to be lifted. And as soon as it does, you will see a flurry of action. I think it's something similar in a way to the UK. So what we see yesterday, the market took all this as being dovish for the pound, and the pound got hit like a 1% or something like that. So, there is uncertainty, no doubt about that. But in my view, the market may still be a little bit too pessimistic on the pound. And the question that we really need to ask ourselves is, is the current state of the UK economy so terrible that it justifies a 0.25% base rate, the lowest in history, and quantitative easing? This monetary policy is supposed to be of an emergency nature. the economy may not be firing on all cylinders. There are uncertainties, but I think, and it's my personal view, that is definitely good enough to not require these extraordinary measures anymore. Some normalization should slowly start coming in. And I think the members of the Bank of the MPC are considering it. We've seen their rhetoric shift a little bit. More people, Broadbent, there was an article, Broadbent today, who said, yes, we are in a good position to take care of hikes when they come. So, my overall opinion is, yes, there is uncertainty for sure. Nobody can deny that. But I think that the market may be getting ahead of itself a little bit, as it usually does when it comes to the pound. And those were my thoughts on the Bank of England, basically. So that's what I wanted to say.
Del, do you have any levels in mind, since you have a long-term macro bullish stance in pound dollar, that you'd be interested in beginning to move into the long side of cable?
Yeah, it's a good question. The cable is a tough one right now because the dollar has been hit quite a lot. So I personally expect a little bit of a bounce in terms of the dollar. So cable might get hit a little bit when that happens. My personal view and in my personal portfolio that I trade, I think anything in the if there is another leg down towards, there's a very long-term trend line support which runs around 127 right now. If it gets anywhere near there, that's my entry point. And I think that
is that like a weekly? I pull it up a weekly here, so
yes,
right around. Yeah, there's a lot of moving averages down around 2670. So yeah, right down there.
I wish I could show it, but my internet connectivity is very poor. But that's what I'm looking at, basically. I think that would coincide with a bounce on the dollar. Like the DXY is due for a bounce, probably towards 95, 95 and a half, something like that. When that happens, cable might get dragged down a little bit, and that will be my opportunity, my signal, basically, to start getting long.
Okay, I think you said you also have some thoughts on the Fed.
Actually, no. I would wait for the. I wasn't to wait for the payrolls first. Before I do that. So sorry about that.
Anyway, talking about the NFP, I hope everyone out there, the 200,000 plus, whatever the number is, still end up with a career like yours that can go to Greek islands all summer.
I wouldn't change the Greek islands for the world, my friend.
Okay, buddy. So I'd like to introduce investing.com to our CEO, Blake Morrow. Blake, how are you this morning? Maybe he's busy trading right now. I believe Nick is here with us today, and that's always a big edge to have Nick and her views. So I'm ready.
Sorry, Dale, I'm here.
Okay.
Yeah,
okay,
I'm
buddy.
here. I was talking and I was muted. So.
Okay, bro. So great trading with all those closed pattern and plays going into the NFP. I don't know what kind of number or reaction you'd like to see. I think we talked yesterday that we'd almost like to see the dollar sell off a little bit more, maybe a disappointment on the number, and use that as a buying opportunity in the dollar. Where's your head at? Where's your head at?
Well, I think the most important number today is not necessarily the headline number, but it's actually, it's the average hourly earnings. Yeah. And that's the number that needs to improve. And the market is looking for a little tick up in average hourly earnings, but that's really that's the number. That I know I'd mentioned this yesterday, and let me take over here. Let me grab the chart, and let's see here. Okay, so when you're just when we were talking about the numbers coming in earlier this week, everybody in the market really understands that we're at or near full employment. So the headline number is not so important at this point. I mean, obviously you don't want to see, if the market's looking for, today we're looking for about 180,000 jobs. You don't want to see it come in at 100. But I mean, if it comes in at 165 or 170, it's not the end of the world. As long as wages are going higher. If wages are going higher, then the dollar will have the ability to move higher. Now, you look at the, you know, from a technical standpoint, I think it's laid out really quite simply. And I'm going in flat, so I'm going in without any positions, but my attitude is simply that if the dollar strengthens, the problem is you got the euro that's sitting right on this trend line, that if it comes under pressure, it may not give us much of an opportunity to get in. I mean, if the euro, you know, like let's say the euro, you know, automatically drops to like 118.20, you know, it takes a 40 pip hit initially, it's going to be a little bit more tough to try to chase it lower. What I'm hoping happens, and this is you know, I try to plot it all out in my head ahead of the data. Let's say the headline number is weak. Let's say we come in at like 150,000 jobs, but the average hourly earnings and the wage growth looks good. It's solid. Then what I think may happen is the euro could spike higher initially, so the dollar could weaken initially, and then from there I would look to play the dollar to the long side. Now, technically, we rejected, and I'm going to go out to a daily chart really quick. We rejected the 161% extension of the election night spike highs to the lows at the very end of the year, 2016, and we've hit 161% extension. We hit that this week. We spiked up there, I think, on Wednesday. Now, if you look a little further out and you go over to the weekly chart, this multi-year consolidation we've been in, okay, the 127% extension of this move, okay, of this bigger move here. Let me grab. You can see it from here, right here, right? Yeah. This comes in just above at 119. Let's just call it 119.50, 119.60. Okay. You can go out even a little further, and that would take us out to like 120.70. But and which we could still see those levels, but I think there's the potential of us to spike up towards, you know, 119.50, you know, on a if the number is really weak. I don't know if we're going to make it all the way up there, and something's got to be really pretty poor for the dollar to make it all the way up there. But I have to point out that the relative strength on like a weekly basis, I mean, if you look at, we're almost approaching 80 on weekly RSI, which is ridiculous. I don't know when the last time we've been up here. It's been quite some time. You know, you're talking 2003. So we're reaching astronomical levels in relative strength, which, you know, tend to point towards a move lower eventually. The daily relative strength is divergent. You know, we're not moving, as price is moving higher, we're not moving higher. We could still move higher today, but I'm just saying we have not been for the last, you know, week and a half. So this really, you know, is a problem, which tells me that the euro upside may be limited. Now, I don't know if today is going to be the day where it peaks. Maybe Wednesday was the day, or maybe we rally into, you know, Monday, Tuesday. If it's a really weak number, the dollar continues to sell off. But I'm getting very skeptical up here. And so if we have like a strong dollar, I know Stelios was just talking about, you know, the UK economy and the strength of the UK economy, and, you know, the way it could turn, and I get that, but I want to point out the price action, and he mentioned it and perfectly, and I have to reiterate what he said, that the pound has been acting or underperforming against the dollar. And yesterday the pound hit 161% extension, reversed, and we came right, you can see us right on this trend line right here, okay? We're basically sitting on the trend line right now. If the dollar strengthens out of the gate, the pound, which is, you know, set up, and you could call this a bear flag formation. Let me grab the let me grab a pen really quick.
Blake, also on the euro, just to point out, you're going over fibs. You know, people are starting to look at retracement levels from the 140 high to the 103 low, and right now we're in between a little above 38% of that big decline in the euro from 140. And I think about 122 or 121 is about 50% back.
Yeah, and so we're in between, and that's the problem is,
Yeah.
is we're in between fibs. So it's not anything that's within, you know, that's an issue not for today. And today's
Right.
what matters to me, not necessarily what's going to be in the next week or two. What's you know what's important right now in the next 9 minutes. Okay, so if you look at the cable here, we got this like possible flag formation, which we could move lower. And that means a breach below 131 should bring in further cable weakness. So if the dollar strengthens right out of the gate, that's something that I'm going to be looking at is the cable if it breaks through 131. Now, one last thing I want to point out is we do have the Canadian and the U.S. jobs report at the same time. The dollar Canadian it really hit channel support, if you will. You can see actually we actually pushed a false breakdown right here late last week. We have a false breakdown, so now we're getting that move higher out with the US dollar Canadian. Now what's really going to benefit the US dollar Canadian at this point is if you have weak Canadian data, which Canada is expecting a weaker data point than last month. Okay, if we have weak Canadian data or less jobs created in Canada than expectations, and we have a stronger dollar reaction, you know, if like let's say wage growth is strong, then the dollar Canadian is at risk of moving higher at this point. So if we have a really favorable dollar reaction and weak Canadian reaction, I am looking to go long the US dollar Canadian. I think it is now. Again, it's one of those, a couple things have to happen in order for me to be long the dollar Canadian, but I think it is a good setup. And so for me, you know, strong dollar, I'm looking to short the pound, looking to go long the dollar Canadian. If we have a weak dollar, I want to see how the euro reacts. You know, the initial weak reaction is important, because if the dollar weakens and then immediately strengthens afterwards, so we get that knee-jerk reaction, which is very common on a day like non-farm payroll. If we get a knee-jerk reaction, I personally might be looking to short the euro if we get a spike up and then reverse. I don't know if I necessarily want to sell into a spike in the euro. If we get a spike up to 119.50 or 1960 or whatever it is right up here, I don't know if I want to sell into that spike. Initially, I kind of want to watch the price action. Because if the dollar weakens, then it quickly reverses and it starts to strengthen. Then we might end up getting a dollar strength throughout the rest of the session. And so those are the things that I'm looking at. And you know, a lot of people, and I myself included, I look at the dollar yen. Okay, I look at the dollar yen and I sit here and go, well, you know, how's the dollar yen reacting? Today we're stuck at the 110 to 111 range, and you got a nice downtrend line here, and the dollar yen is extremely weak. I think it's going to be more if the dollar spikes lower on a weak number, then we might just test 109.50, which is this trend line right over here. And then on a strong dollar reaction, we might get to like 110.60. But I'm not really using the dollar yen for direction, because I think the dollar yen is going to be more affected by bonds and equities, even though the initial reaction is going to be, reflective of how the market is viewing the dollar. I think the overall trend of the dollar could be different, because if you have, like, let's say wage growth is really strong and the numbers aren't horrible and the dollar starts to strengthen, well, stocks might not find that favorable. And if the stock market comes down, it may give us dollar yen weakness or yen strength. So we may see the dollar strengthen against the euro, and you see the euro come down, and you see the dollar weaken against the yen. You're actually seeing the euro yen move down with risk aversion. So the dollar yen is not going to be my tell today. It's going to be more of the, you know, how the euro is reacting, and, you know, the dollar Canadian as well. So that's my view. I have to get moving here in about a minute. I'm going to pass it over to Steve. Steve, what are you looking at ahead of non-farm payroll?
Hey, hey Blake. I'm looking at the USD yen and the euro, as you said, but I can tell you that more dollar pairs are in interesting junctures. I mean, we had yesterday the pounds move lower from the top of an ascending wedge. So for me, a push higher in the dollar, which would mean the break below that wedge, would also make, from a technical perspective, the cable a very interesting sell. And I'm actually more inclined to go that way than the euro, but I do monitor the euro quite closely, because I also believe that some kind of a correction has to come sooner rather than later. Although I have to say that exactly the comment you made about the weekly RSI being at 80, something that hasn't happened since a long time, is another confirmation in my mind. Let me take the screen. Is another confirmation in my mind that the euro has really changed. I mean, we spoke about the dangers of the euro reversing and going into an uptrend since we were in this triangle, and the fact that we have been hitting RSI highs over and over and over and over again is, a typical behavior in a market that's bullish and not in a market that's actually bearish. So I know that a lot of people are still viewing this like like a strong correction before another move lower. Personally, I would be very, very skeptical. The political risks.
I don't believe that. I mean, I see where people are coming from, but I think this euro dollar move is very real.
Same here.
Yeah,
Absolutely.
Very real. I think that
absolutely.
If you think about, like, what are the reasons? Give me a good reason why I should own dollars. There's too many political risks. The Fed is, for all intents and purposes, probably
just to pay your bills. Just to pay your bills, Blake.
There's no reason to own dollars at this point. And I've been trying to justify why I would be long dollars on for a bounce. I can't really justify a reason other than it's oversold. That's it.
I'm 100% with you, and as you've mentioned also a lot of times, besides being oversold, we have an extreme sentiment. Positioning has started to be extreme. The usual factors that you see before at least a knee-jerk reaction to push out of the market the weak hands, let's call them. So yes, that might happen. Now, having to do with the USD yen, which, as you said, yes, will be affected by the bonds. Bonds, by the way, speaking of the bonds have disappointed several times so far people that were looking for a breakdown, right? And I'm talking both about the treasuries and the Bund, actually. So yes, USD yen is going to be affected by the bonds, but I believe that the bond market itself is going to be strongly influenced by any NFP print we see that is,
looks like a make or break day there in the chart you're showing, Steve.
Yes, more or less, yes, it is. So because we have in a few seconds, we have the announcement. What I'm watching in the USD yen is this triangle, actually. So we are very close to support. Even if we get a move lower, if we hold this zone, fine. If not, that's going to be another breakdown signal for the USD yen, and obviously that's not good for the dollar. But I think we're just a few seconds away.
Few seconds.
Yes. So I'm gonna leave.
You want to be quiet?
Okay. Probably we have a good number. I see. 209,000. Yeah.
Wow.
Versus 180. So as you see, there is the positive reaction we were talking about. Here it is, but let's see the rest. Canadian data a little bit weaker than expected. We're going to see at the USD CAD. Average hourly earnings exactly as expected from the market. So at least that's not going to offer a headwind to dollar strengthening. So in general, this print should be at least even slightly dollar positive. Here is the cable chart we were talking about, and this is exactly what we were expecting since days ago, and it seems to be playing out. We're currently about to test the support of the wedge. So you know, if people start bailing out of their dollar positions at the moment, you know, after the NFP print, we should see some acceleration, and I'm guessing some stop losses are there. The reaction from the Euro USD is not strong yet. We do have, of course, a black candle being formed here, but we still haven't seen any acceleration lower. Let's have a look at the USD CAD since the US data overperformed and the Canadian underperformed. Okay, we are resuming here, as it seems, with another white candle, and we are about to test the descending channel resistance. So this is going to be a huge level for the USD CAD, because it's going to be the first time in a long time that we will be seeing. I mean, we've been following this channel since May, and since the beginning of May. So this is a 3-month channel, which if we actually finally manage to break to the upside, you know, it's going to be some first sign of a rebound, which you know, should get us to at least 128 if it's confirmed. Let's see what else is moving in the markets. We have the Kiwi breaking back below this trend line. We have the Aussie, which is you know, still haven't made any real progress in the downside. It has been rejected, but you know, it's not outright bearish yet in any way. Obviously, and this is no surprise, stocks are reacting positively, or at least they're keeping, you know, the little gains they had, you know, pre-market. But they remain. I mean, the vast majority of the stock markets remain in consolidations, and you know, the biggest example of that, speaking of the stock markets, is the Nikkei. Just look at the Nikkei. The Nikkei has spent exactly 2 months being in a very, very tight triangle. So this, one way or another, is going to be resolved, and it's going to be resolved, you know, quite soon, because as you see, the range has tightened a lot, and obviously that should affect the USD yen as well. The overall structure is that we are in a triangle within an ascending wedge. So you know, even if we break higher, then we need to face the test of the ascending wedge resistance, and until we clear that, you know, there is a valid bearish interpretation following, but you know, that's not for now. The Nasdaq is also in a clear triangle. As we've warned, you know, several times, triangles do tend to be resolved to the upside. So it wouldn't be a surprise to me to see another push higher, just above 6,000, because before seeing, you know, some bigger kind of correction. But you know, you shouldn't discount the fact that these are some very bullish markets. Okay, the cable seems to be doing the move. It's currently on the precipice.
And we got the bear flag formation in the pound.
Yes, which is breaking, correct. If you go to, yes. And I really believe that a break below this wedge support is not going to be held this time by the 130 support zone, because this is going to be too shallow of a retracement. So to be honest, my gut tells me that we will at least test the 128 support zone, which is the second support zone I have on my charts, once and if this break below the wedge is confirmed. Okay, the euro still isn't playing ball, as you see. I mean, the move from the euro is you know, really subdued. USD yen, on the other hand, is probably having the biggest reaction, because it almost has completely retraced yesterday's move lower, and it seems to be holding once again. This is going to be the third day, the 78.6 of this move higher, and we still remain above the triangle support, which, as we said, you can even redraw like this. So you know, as it seems, this confluence of supports is holding, and that might produce another move towards 112 as long as this zone holds. Let me see. Did we have any more numbers, Stelio, that came out while I was going over the charts?
No, I don't think so. I think we've gone through everything. We went through US and CAD, and that's it.
Okay.
We had CAD trade balance. Did you talk about that? But,
No, say about it, please.
Yeah, no, trade balance in Canada was quite a bit weaker than expected, but this it's a volatile number. We came in at minus 3.6.
Employment numbers, which were a little bit weaker, a little bit. They were like, from what I saw, around 10–15% out of the expected, which isn't anything great.
Yeah, and the trade balance numbers, and that's it. Yeah. So you covered everything.
Okay. Okay, nice. So now it remains to be seen what happens from this point on. Okay, as it seems, we're not seeing yet any follow-through. Greg and Nick, as long as the market isn't moving much, do you want to take over and show some of your charts and expectations since the market has calmed down?
Hey, Steve. I'm here.
Hey, Greg.
Hey.
Okay.
How are you?
I'm passing the screen to you.
Okay, sure.
There it is. And go ahead and show us what you expect, especially now that you've seen the initial NFB reaction, which is slightly dollar positive, although I have to say that the euro has almost retraced the losses of the day and is almost flat at the moment.
Yes, actually, it appears that this can still be a correction, and that spike to a new high can still be coming, because normally, from my experience, 70 to 80% of times the first move after non-farm payrolls report
is being retraced.
Yes, exactly. So I'm not surprised actually to see higher prices on euro dollar now. But I'm looking here at the dollar yen, as you said earlier. I'm seeing it at very interesting support area. I still think that we will see turn to the upside in the next few days. Ideally, next week, I will be looking for a free wave price up into wave D. Now, this also comes very nicely together with DAX. Now, I made an overlay chart with between dollar yen and DAX. Just a second. So actually, my idea is here that stocks will continue to the upside, and that dollar yen could also turn higher. Okay, so here is DAX with the dollar yen, and you can see that there's a pretty tight correlation for this month. So if DAX will turn to the upside, as you know, we mentioned this in a blog post on Monday, I'm expecting a bounce, and ideally this will also help us to move higher on dollar yen. But for now, I don't see any signs of a completion or of a tradable low here on DAX, since this could also be now triangle in a wave 4. Okay, so I think that it's better to wait maybe for markets to settle down, as Dale also highlighted earlier. It's better to wait.
Although, Greg, since you're on a 4-hour chart, somebody could also claim that what DAX is crafting here, if you see the 4-hour chart, it's not very pretty, but it is one, is an inverted head and shoulders formation right on support, right?
You mean here left shoulder,
yes,
and the right shoulder.
Yes.
Okay, but then we should definitely close above this previous week
to be confirmed
at 12:30. Yes.
Yes. Exactly. Yes. So because I was looking at that, I mean, there is a possibility that we will actually bottom from here without seeing another low. Although I don't disregard your count. I mean, you're way more often right than wrong. But from a purely basic technical analysis perspective and not the Elliott wave perspective, I do see the possibility of an inverted head and shoulders here.
Yes, actually, if this will prove to be correct, okay, then
4 was up there. Then 4 was up there, and that was 5, right?
Yes, exactly. Yes. We talked about this 2 days back, right? So in such case, as I said, if this would prove to be head and shoulders pattern, a bullish one, then definitely we could say that dollar yen could be then done to the downside, which means I would likely be looking for pullbacks and maybe even consider some long ideas here. if we get above this trend line resistance. Okay.
But you still believe that this recovery is going to be just another leg of the larger triangle. So you do not expect this recovery to lead to a breakout, but you expect it to be rejected for one last time, correct?
Yes, exactly. I think that we will stay just sideways here for the next couple of weeks. But we are at the lower side of this trading range, and that's why I'm believing that we will see a next leg to the upside. And if we get a confirmation from stocks, then this will be just even better for our field.
Okay, nice.
I just want to mention to our investing.com viewers, I know a lot of our community know it, but I call Greg the Wizard of Waves. I interviewed him on FX Street as an award winner for his great research. So for people that don't know about Greg Horvat, he's one of the best Ellioticians out there.
Thank you, Dale. I appreciate it.
You're welcome, buddy.
Okay, so you also talked about cable a lot. Actually, we posted this chart and highlighted this resistance. It's very important at the start of the week, and we have seen a very nice rejection from it. Now, the only question is if we'll get a strong decline into wave 3, or is this wave 2 going to be more complex? I normally don't like such a small pullbacks for wave 2, not even 38.2%. So I'm hoping for another, maybe more solid pullback here next week, and then I would most likely trying to join the downtrend here, new leg lower. Okay. So cable is also
okay, but regardless, from what I showed you from a basic technical analysis perspective, I mean, this does look more or less, if we break down, like a complete formation, because it's a very nice, I mean, it's a very well behaved ascending wedge so far. Obviously, we still haven't broken below it, so yes, we can get another pullback before actually managing to break below it.
Yes, exactly. But the key is here that either we go down or lower from here, or from a new from above this swing high. So in either case, I would expect more weakness on cable as long as we are trading beneath these highs that were established yesterday. And also notice that here we turned down perfectly this week from this upper resistance line of this ending diagonal. So clearly, based on Elliott wave techniques, Elliott wave patterns, I really have to look to the downside here. Okay.
Yeah, we agree 100%.
Yes. Okay. Or
anything else?
Yes, we just Aussie against New Zealand dollar. I'm still looking for this one to continue lower. We have seen some nice reaction to the upside since Monday, but it looks like that we found resistance here at the area of former wave A. So this fits nicely into a flat correction, and I would not be surprised if we see much lower prices on this pair in coming days, coming sessions, especially after we have seen this huge reversal here with a spike. I think it was made last week, so decline was impulsive, and I'm expecting either wave 3 to the downside or maybe just a wave C, but definitely I'm expecting these lows to be retested that we've seen on Monday.
Well, one of the reasons I like this this count, Gregor, is that I know that the vast majority of the traders are looking actually to be long the pair. I'm personally very skeptical since we didn't break above the descending trend line, and I think that you know, if it actually follows through to the downside and actually breaks down to new lows, having to do with a specific pair, that's going to be the pain trade. And you know very well that the market, you know, is very commonly following what is the pain trade.
Yes. Just a second, I'm just looking here at the euro dollar. I think we got a very nice reversal here. Just a second. Okay. So like Blake said, there will be no chances to get in if you get a very sharp fall, and as it appears right now, it looks like that this could be in fact wave C low. Okay, we spiked to a new low here, and we are now already reversing. If we go back to 1.190, then I think the new highs are
It
forming.
goes to new highs, yeah.
Yes.
But okay, but where is your target afterwards? I mean, okay, let's assume that it does exactly that it recovers. Where is the next target?
Clearly, euro-dollar is an uptrend. We cannot ignore that. And if you remember, we were talking about, actually you highlighted yourself a few months back, and you said that we could go all the way up to fill the gap, to fill this gap. And this is gap from end of 2014, okay?
Wow. Yeah.
Mm-hmm.
So actually, it appears that we could go towards this gap and then we see what happens there. We still haven't filled it. And as I remembered you also, I asked you back then to check if this gap is for real or is on my platform, and to say it was. So I'm expecting this to be triggered, and I definitely need to respect what market is doing on a shorter term charts. If you see a three-way pullback accomplished, this means market is bullish.
Question, Gregor. Despite the strong move we have seen to the upside, do you still believe in the long-term chart that this recovery is just a wave 4? Because I still see that you have it as a counter.
Yes, because normally I will not change counts dramatically from week to week, because otherwise I can go crazy. So definitely I want to stick with a few, but even if I'm still expecting a turn to the downside on a longer time frame, we still need 5-wave rise here within this wave C. So either this is going to be a first leg of some very big turn on euro-dollar, or maybe just a pullback. You still need 5 waves up. So my key is here that I will be looking for even stronger euro after a bigger corrective drop here in wave 4. So let's say for the next 2 months, maybe even 3, I don't see any influence of the price action that should have on a longer time chart.
Okay, great. Okay. Nick, are you here?
Thank you, Gregor.
Hey, yes, I am.
Nick, hi, Nick. How are you?
Hi, how are you? Good, thank you.
Good. For those that don't know Nick, at investing.com, Nick is known for her harmonic work. I call her our diamond here at ForexAnalytix. So I haven't heard from you since the fork in crypto on Monday. I hope you didn't get stabbed by the hard fork. And yeah, so what's going on, Nick? What's on your radar?
Yeah, not much. You know, I've been watching everybody's agree with everything Gregor said. No, I'm a huge Gregor fan. I'm really not sure though that we're not going to see one more push higher for me in the euro dollar, and you know, the trend is your friend. And for me, I think the next fib, if we go to the 7-2 extension of the entire sort of 18-month wedge we made, I think 120.87 is where I'm looking next, and I think the pain trade, you know, might be one more squeeze. So
did we see your screen, Nick?
That's what I'm thinking. Certainly we're at a big resistance. Yeah, you can just go ahead.
Just waiting. Do I need to pass it to you?
Okay.
All right.
It's not sent me the dialog box to take it yet, so.
Yeah. Here you go. Here's the presenter.
Here we go, yeah. Have you got this one, or?
We can't see anything yet, Nick. We can't see any screen.
Okay.
Hey guys, the dollar is making a push here, pretty valiant push. Just FYI, it's still holding up pretty well.
Yeah, indeed. Actually, cable is breaking down. It's now below 131. Huh?
Yeah, hold on. It doesn't seem to be loading my screen. I'm really sorry.
Yeah,
This
you're
is
up now.
frustrating.
Now you're up.
Stick with.
Now we can see your desktop, Nick.
Yeah, you're good, Nick.
Okay, so okay, hold on. Let me change the screen. What can you see now? I've decided not to show my
an empty black desktop with.
Yeah, what the hell is going on now? It's just it seems to have crashed everything.
Is that a seahorse on your desktop?
It's like a Fibonacci spiral thing. Here, let's try reloading it.
All right.
Okay, so yeah, if I look at if I look at my euro-dollar weekly chart, I've got these, these 2010 lows here, which is pretty good structural resistance, and it's the 1.13 extension of this swing lower.
We can still just see a black that black desktop screen.
Oh, damn it! Sorry. How does it look now?
Yes, that was a success. We can see
Got
it.
Okay, so for me, this 2010 low is really important. Structural resistance. That's at 118.77, and it's the 1.13 of this last ABC push lower in the euro dollar. So it is pretty strong resistance for me too. I still think though that we're just going to see a correction, that we're not, I'm not even sure it'll be a way forward, just a shallow pullback. For me, I don't think we'll come all the way back to 116.80, but if we do, I don't really see it below. I'm still kind of long-term bullish the euro dollar. I think we go at least to 120.80 and more likely to 125. So that's just how I'm looking at it, and I might be completely wrong. I just see this as this entire decline from 2008 as a big ABC. So not impulsive, and I'm not looking anymore for another leg lower. But if we stopped at 125, maybe I would reconsider, but I'm just not feeling it, I suppose. So that's how I'm looking at it. Anyway, the trend is your trend. That's the weekly. For me, on the hourly, we're still trending higher. I really like to see a reversal. The first sign, I suppose, would be taking out these lows here, which we haven't managed to do yet. And until then, so I'm sort of sticking with the trend. So, but if we do come back, then this is where I'd be looking for 117, 116.85, around there. That's where I'd be looking to rebuy this euro dollar. So
Nick,
that's how I'm seeing it.
V is asking you, when you're done with euro, what is your opinion on USD CAD, and if you believe that 23.6 fib that comes in 127.30 is going to actually cause the market to roll over lower once again?
Yeah, I would not be surprised. I've got it marked on here. This is kind of my sort of bull bear resistance zone. I think if we get above 126.34, or maybe potentially 126.70, I suppose is a bigger resistance zone, then I would say maybe the low is in for dollar Canadian. But for me, I'm still looking for another leg lower. I think we're just bouncing off the previous lows. Let's show you here, clean up this chart. Famous last words. I think we're just, hovering around these previous lows, but for me, this is a bear flag, and I'd really like to see another leg lower. Now, potentially, at the moment, this swing lower that we've done from April is 61.8 of this initial swing lower. So this could be an ABC, and dollar Canadian could bottom here and just keep going. It wouldn't fit with what I see everywhere else, but the dollar Canadian's always done its own thing, so I wouldn't be too surprised either. So potentially If we see a big reversal here, I think that we could potentially see another entire leg higher. So in other words, this is wave 1, 2, 3, and wave 4 is complete in the dollar Canadian, and we see new highs. So that's what I'm looking at, just because this second swing lower here is 61.8 of that one, and the bigger pattern in dollar
Nick,
Canadian
you're lagging a little bit.
88, I haven't put on, which is here for a back pattern here. For a long time, I've been for a back pattern here. So because I'm not an Elliott wave purist, it doesn't matter to me that we've incurred into this wave 1 here. So I would still be looking for 153 if we rally from here and we take out this intermediate high. I think we go to 153 in dollar Canadian. I'm really sorry, this my connection isn't working better.
Yeah, yes, it's okay. What about your view in the USD yen? Since we saw it through the eyes of both basic technical analysis and Elliott wave, what is your view on it?
I've been a bull, a dollar yen bull for quite some time. I've been watching for a resolution of this sort of big wedge pattern that we've been in. So for me, I think that, you know, barring a breakdown below here, we've made an ABC correction, and now I'm looking for another leg higher in dollar yen as well. So I'm bullish from here.
Use a line there from what I see. Greg is expecting higher as well. I also think that the support is going to hold here. So, you know, we have an alignment of even views here.
I think Kuroda's looking for higher.
Okay, good. Yeah.
That's a good one, Dale. Yeah, Ben Kuroda definitely looking.
Kuroda Toyota.
The only thing
great looks, Nick.
Sentiment is really bad. This Kiwi, you know, that everybody loves to hate, really tried to make an inverted hourly head and shoulders today, didn't it? Eh? Didn't quite manage it, but it certainly had a go.
Yes, it did, and
yeah,
you never know. I mean,
it's not.
It's still early. I mean, we might get on. But by the way, USD yen is actually about to break above the previous, about yesterday's and open and the day before yesterday's close. So that's definitely a bullish move.
Someone's alarm clock is going.
Yeah, for me, you know, I like the
I think
Fibonacci trick. So above 110.90 and these previous highs would be reversal for me.
Yes, and guys, I'm not sure if you noticed. This is what I'd be looking for. We have 5 waves up on dollar Swiss.
Interesting.
Yeah.
From July.
Thank you for mentioning that, Grega, because I forgot to ask you something very, very important. I've been bullish the Euro Swiss for quite a long, since we were at 109 actually. I've said, you know, that this market has changed. And obviously this has been a huge factor in helping the USD Swiss deviate quite a lot from its usual inverse correlation with the Euro USD. I mean, we even had days that both the Euro USD and the USD Swiss were higher, which we hadn't seen in years. So the question is, and that applies to you as well, Nick. What do you think about the Euro Swiss move, and where do you think it can take us? Personally, I believe it can go a lot higher than here, which means that any pullbacks in the Euro USD are going to be enhanced in the USD Swissy on to the upside, of course.
I'm looking towards...
I think it's all down to the Swiss National Bank. They're currency manipulators. They buy it. They've said they still believe that the Swiss is overvalued. They are very busy buying this, and I would not trade against them. So, you know, and they do not like currency speculators. So I don't trade against them. They've shown what they can do.
So do you believe that the recent move is another push from the S&B, or something.
Yeah, take a look at their, no, it's their balance sheet. Take a look at their balance sheet. Like, you know, they are buying, you know, they are, yes, they do not, the euro is appreciating, and they've heard the comments, same as we've all heard about possible, you know, tapering of the ECB balance sheet later this year. They know the market will anticipate it, and I don't think that they want the Swiss to strengthen in lockstep, so they're taking action. That's my belief anyway.
Okay.
Certainly big money is diverging the two, and why would you trade against that? So that's clearly the trend, like the Euro Swiss is
I
clear.
personally believe that big part of the strength is people removing their money from a currency that has a negative yield, especially now that the euro seems to have changed course. And most importantly, if you think about it, Nick, during the past year, a lot of the fears that we had about the Eurozone, both its political stability and its economy, have completely receded. I mean, think about it. A year ago, we were afraid that we might get Le Pen being the head of France, that Merkel was very likely to lose the elections in Germany, which who knows what changes in politics it would bring, that Austria would be governed by the far right, that Greece was still likely to default, etc., that Italy would be handed to Beppe Grillo, and who knows what he would do, because he had said a lot of things about you know, perhaps even leaving the Eurozone, etc., etc., etc. And none of that actually ended up manifesting. Quite the opposite, actually. So I do think that all this, you know, all this removal, let's say, of euro risk, which initially wasn't at all priced in the markets, is now actually, you know, has been affecting the Euro Swiss as well.
Who would have thought that Chris Laurie would be here today on an NFP day, Steve? So
that's going to be great. I'm really looking forward to the interview.
Yeah, so Chris is here. I see him in the house, and I want to thank the team. We heard from everyone on the ForexAnalytix team today. Great effort, nice looks, excellent analysis, guys. And without further ado, Chris, I see you in the house. I'm going to make you a panelist, and after that, your mic should be good, and we'll go ahead and we'll get started. So looking forward to hearing from you, Chris.
Dale, can you hear me?
Hi, Chris. How are you?
I'm great. Thanks, Dale. Thank you very much for having me.
Oh, Chris, you know, I've waited 3 years for this interview, so I'm glad. Thank you for coming out of retirement to do this.
Well, I apologize for the delay.
You know,
and thank you.
I can't tell you, Chris, how many people in chat rooms and trading rooms that I've facilitated, or I was the anchor, or I was the moderator. I asked people, you know, where they learned to trade, who they give credit to for teaching them methods that made them effective in the market. Countless numbers of people name you, Chris. So you've mentored and helped hundreds of traders over your career. Blake told me he knows you. You guys filmed something together a decade or so ago, and also he calls you Mr. Carry. So you're very well known. You're very well known for the carry trade. So really great to have you, Chris. And I know today you want to talk about psychology and trader development. But why don't you? I'm sure very few people know. Tell us how you got into the industry. Who were your influences? What was it like for you at the beginning of your journey?
First of all, Dale, thank you very much for having me on your distinguished show, and it's a pleasure to be one of your guests. First of all, how much time have we got, just so I can get a sense as to?
We have as long as you need. How about that?
Okay.
But I'd say, 25 minutes, 30 minutes, something like that.
Okay, great. Well, my interest in the financial markets dates back to my teen years under the influence of my father, and so he really encouraged me to gain a knowledge of the dynamics of the financial markets. And back then, of course, we just had periodicals mailed to our house, and I would sift through a lot of these periodicals just to get a sense for just the basics of how things work. And then, of course, my whole life I've been in sport, and then I did make a decision I was in track and field at first, and then made a decision to go into bobsledding, and then that carried on for about 14 years and four Olympic Games later. But in the meantime, I had finished university, and I had taken some financial courses, and I took Canadian securities course, and really more or less took an interest in the trading aspect, although I wasn't really trading much. I'd put a few $1,000s here and there, and back in the early years, and just to get a bit of a feel for things. And then in my latter years in sport, I started taking a deeper interest in trading, and then when I retired from sport in 1998, I had really put my focus toward foreign exchange, and just started to took a couple years to develop with a focus in foreign exchange. I was connected with an outstanding trader and analyst out of South Africa, and it was through him that I really learned about understanding the importance of the development process as it pertained to trading. So we did countless studies together till our eyes were bleeding, and it was just a phenomenal experience to get a much deeper sense of how trading really worked. And
interesting. So everyone had. You were fortunate, Chris. You had your dad instead of the internet was barely around then, and you had your dad to mentor you, and then you connect with a great trader. What an advantage compared to people nowadays that have to really weed through all of the hype on the internet to get a true picture of what it takes to do this. So that's a really important point, in that we all come from a different place, and now one thing that I think that the listeners should understand is that everybody has gone through a process of starting at point A, engaging in a process, and arriving at point B where success has been achieved. Everybody has been through it, regardless of what it might be. Everyone has a gift and a skill set, and everyone has a very, very unique psychological profile. So as if someone takes an interest in trading in the foreign exchange market, they come into the market, and obviously they are barraged with a mass of information, and they'll go through the exploratory process of trying to copy what somebody else does, and trying to listen to somebody else's trade calls. So you were pretty self-taught, Chris, besides your mentor about the psychology and trader development. Technically, there weren't any major influences, books that you read. I know when I cut my teeth in the market in the mid-'70s, I read Edwards and McGee. It was like the Bible of technical analysis back then. Did you have anything like that opened your eyes, gave you an ephany to trading?
I think what happened was, and this is one of the things I want to talk about, is the development process. Is that when I engaged in going into the foreign exchange market and trying to sift through all of the information, and when we engaged in our studies being mathematical models, price behaviors, price delivery, etc. What happened was I realized that I realized that what I didn't realize, which was that all of my experience in sport had refined my psychological profile to the extent that I could take the psychological profile that I developed through intense engagement in sport and combine that with market knowledge that was being acquired through the process of studies, studies and back testing and et cetera. And what it was the process was blending the two. So I had this skill set psychologically that was developed in sport, and then I was developing, I was developing the knowledge in FX.
So athletes,
it was a matter of combining the two.
Athletes know, Chris, there's no immediate gratification. That, the secret to success is hard work and persistence, and that translated into the markets for you.
Well, if you think about it this way, that when you're and for whatever it is for you, you can make the correlation. So for me, it was sport. So if you think of it like this, that when you engage in sport, every time you enter into a competition, you get thrown into the refiner's fire. So every time you engage in a competition, you're exposing you're learning your strengths and weaknesses. And so then you take the strengths and weaknesses and you use them as a foundation, you internalize them, and then you build on that for the next race. So you go from being like a local participant to a national participant to a international to World Cup to to Olympics. So it's a long process. But the important thing is understanding the whole development process. And so if we relate this to trading, that's a very important point, is that what we find is that when traders come into the marketplace, they read these things about you have to have a trading plan. Well, simple enough, simple to understand, but you cannot copy somebody else's trading plan because you cannot copy the unique way with which they think. And so what you have to do is you have to design a very tightly structured development plan. So the goal ultimately is, as you go through the exploratory phase, you want to marry your unique psychological profile to that of a specific market dynamic, be it mathematical models or moving averages or price behavior or fundamentals or a combination of the two. So you need to figure out exactly what works for you by engaging in a process that's going to ultimately marry your unique psychological profile to one small little niche in the marketplace. You don't need to be the master of all things. You don't need to understand you don't need to have validation behind what you understand about all of the cross markets. Yes, it's important to understand them, but all you need to do ultimately is find your niche in the market, your avenue into the market through which you engage and can discerningly draw money out. And it does
that confirms, Chris, with what Jack Schwager says. And I asked him that question, what's the most important piece of advice you can give traders? And he said, find a trading style that suits your personality.
Correct. And what's important is engaging too in the process that optimizes your strengths and puts you in a position where you can manage your weaknesses. So to try to copy what somebody else does is not going to work. You can get ideas from other parties in terms of different manners of the market that you can explore, because I've got friends that are just phenomenal with writing code, and that is not within my skill set whatsoever. So for me, it's the studies we've done is on price delivery. We've done a lot of research with the manner in which the prices are aggregated, the way they get delivered to the market, connecting that to to the market psychology and fractal and patterns of self-similarity at a reduced scale. And so I think it's really important. So the bottom line here is the primary point here is that it is important that whether you're learning to trade or whether you've been trading for 15 years, engaging in a process that enables you to internalize the market behavior and marries market behavior to your psychological profile, so that you can optimize your skills and your cognitive abilities.
What were your strengths and what were your weaknesses, Chris, to kind of give us a live example of how it was for you when you discovered this being critical to being successful? So you knew what you did well, you knew what you didn't do well. So what were they?
I was fortunate enough to be to be engaged in studies that were more specific on price behavior. I had difficulty connecting with mathematical models because I couldn't grasp them, because I didn't understand the complexities of writing code and the mathematics behind what information it was providing us in terms of time and price. So I was connecting with what I could actually see in relation to what I understood about
your visual,
your order flow. Very much a visual. And for longer term, obviously we incorporate fundamentals, absolutely. But for the short term, the intraday volatility trading, it's really just a matter of it's visual, just price behavior. I don't have anything on my charts. Just some candlesticks.
Okay, so you trade naked and you keep the blinds closed.
Completely.
All right.
Yeah.
So how do you go about it now? Are you helping people find their way in trader development?
I've eased off of public exposure on the internet, and I do have a website, protradersclub.com, and there's not much information about the information we provide inside the site, but there's an enormous amount of information in there. There's a couple thousand videos, I guess, but teaching videos. But so I'm doing with retail traders, I'm doing, I guess, about 3 days a week, just short videos, teaching Q&A, recording live trades, talking about the positions we're in, talking about the positions, how we structure positions with the bank. For example, we've been looking at short Swiss, we've been engaged in short Swiss for a course of a year now, and so we just talk about how we use accumulators, when we're switching cash, and how the positions are structured. Things like that, or we talk about when an accumulator is down into double accumulation at fix on Wednesdays. So things like that. But it's really the primary focus is on the is understanding price delivery, short-term price behavior, all of the manners of the short-term volatility. But it's presented in a way that we engage the individuals to connect with the price behavior based on their unique skill set. So the idea is for a trader to internalize the market space within which they are going to go into the market to draw money out. Within
you're very well known for your belief in Aussie yen being risk on, risk off indicator. I pulled up the weekly Aussie yen chart right here, Chris, and we peaked back at the end of 2014 at 102.30, handle drop down to 72. In today's environment with central planning, has it surprised you that there's this big disconnect between what's happening with equity prices and the big break we had in Aussie yen that didn't even affect them?
Yeah, the the Aussie yen. I worked with some Australian developers, and we did a lot of yen, borrowing in yen and moving into Aussie. And these were positions. So, sorry, I do want to answer your question, but I'll just give a little bit of background first.
Okay.
So at that time, obviously, with such a wide yield spread, the volatility was much more friendly for longer term positions. I think that the price behavior on a short term level, the price relationships and price behavior is still, the patterns are still very similar, but the volatility obviously has dropped off. So as far as yes, the Aussie yen, I still think it is one that is good to hold for swings. If I'm looking at my my weekly chart here, I think that I think probably the next opportunity there is going to come is if and when we get this correction in equities, we'll probably see a little bit of flow back into yen, because there's definitely still a lot of borrowing in yen, and then we still borrow in yen. Yes. And so if the yen rallies, so if dollar yen drops, then we will probably take some swing long. So these would be like more shorter term, like multi-week, maybe multi-month type positions. Yeah. So because you can never go wrong with a positive carry, and we don't the macro funds, we don't really leverage anymore. So we would take a position on the backdrop of a cash base. So the overall cash base is not leveraged per se. But if the trade starts to move, we might move into a little bit of leverage.
Okay.
The breakout surprised me.
Oh, go ahead. Finish. Go ahead.
Yeah. So the breakout doesn't really surprise me per se, but I think we can probably drop back. Maybe 84 is probably a good level for that. Somewhere 82 to 84.
Okay. Blake has a question for you.
Hey, Blake. How are you?
Hey, Chris. First of all, I want to say welcome and thank you for being part of our community, and it's good to hear your voice. It's been a long time. I think the first time we met was probably around, I want to say like 2005, 2006, maybe somewhere in that neighborhood. Yeah. Somewhere in that neighborhood. Yeah. And I've worked with you a couple times in the past over the years, and it's always been a pleasure. And it's nice to hear your voice, like I said. And when we first met, it was more of the carry trade was in fuego. I mean, we had really huge interest rate differentials, and now, as we've welcomed into a world of ZERP or NERP, things are obviously a little bit different. But now, I guess the question, I want to stay along the same lines as rates. As the rest of the world normalizes or attempts to normalize, I mean, normal today is probably going to be a lot different than it was, back then. Is there still going to be a demand for carry, and is it going to be wide enough to really attract the big funds like it used to in the past? Because obviously when you had a 7-8% interest rate differential, it was huge. But now I would suspect we're lucky if we're going to get a 3 or 4% differential moving forward. But that again, these are just guesses, and I have no idea. I wanted to hear your thoughts on it though.
Yeah, so there's a couple things, as right now, as of today, and if we look at the market through today's goggles, we're seeing obviously, an attempt or an effort to move into normalization, but obviously every force has an opposite force, and so my view is that things might seem rosy today, but in all likelihood there will be some event that we don't know what the trigger is going to be. I don't know if anybody knows what the trigger is going to be, but there will be an event that can throw us off, right? So as long as the U.S.
Sure.
Starts to to ease off and contract more, then it can bleed into other economies as well, and then they'll need to maybe take their foot off the gas a little bit. But if you have like an event, for example, let's say that there's a debt crisis that occurs in Europe. And this comes out of, you know, who knows where it can what the trigger might be. But if there's a debt crisis in Europe, then assets can flow, funds can flow into U.S. assets, and all of a sudden create this surprise increase in the U.S. dollar and U.S. assets. Now, getting back to your question, if as for the carry trade is obviously not only is it just money moving into yield, but it's also the confidence that one can borrow at a lower rate. They can move assets globally to not only where they anticipate some appreciation in the currency because there's growth being experienced in that region, but funds like during the prime carry trade years, funds were flowing into all manner of assets. And so every asset is priced in a currency, so you have to buy that currency to get into that asset. So I do believe that it will come back at some point, but you know, we'll know it when we see it. But you know, obviously I don't see it happening to that magnitude anytime soon. I think we're still in a flat spot, and will probably be for some time. And I remember in 2008 saying, you know, we're probably here for at least 10 years. And so now we're 10 years. 10
yeah,
years
right.
in, but no, I do think, you know, there's always an opportunity, and whether it's carry trade or whether it's something else, there's always something something of that's available to trade. So for long-term position trades, if we get, you know, 2 to 4 really good long-term position trades, these are trades held at least 6 months, sometimes a year, sometimes multi-year. And right now we're short Swiss against the US dollar primarily.
And that was no surprise when you said that. Was no surprise to me that you would have said that. I was like, oh, of course he's on the Swiss right now. So that makes 100% sense to me. I'm going to let Dale wrap it up with you. I just wanted to pop in and say, you know, Chris, thank you very much for being here. It's so great to hear your voice. And for those people that do not know who you are, I know you've been kind of out of the social media light, if you will, but yes. Traders should look you up. You're one of the best in the business.
Thank you very much.
You're a great trader, great manager, great educator, and your live events are extraordinary, which I've been to a couple of them. So
I
thank
appreciate
you very
it.
much for being part of this.
Yeah, thank you so much.
So we have a few fans here, Chris. Anything you'd like to say to wrap it?
I just want to say that you know, I had chrislaurie.com running. It's been taken down now, and now we have Pro Traders Club. But I want to say that of all the years, I've only been given positive support. It's really been phenomenal, and it has made engaging with the retail public and interests a real pleasure. I literally get no complaints from our members, and they're always respectful and kind and keen, and that really is what makes it a pleasure to be able to share information, because they appreciate it, and I acknowledge that, and I want to thank them very much.
Well, thank you very much, Chris Laurie, for being here at ForexAnalytix Community Experience. I've been looking forward to speaking to you. Your reputation precedes you in here, and may all your trades have pips rain down on you and anyone associated with you. And I'd like to thank you and call you my trading warrior brother, Chris Laurie.
Thanks a lot, Dale. I appreciate it, and hopefully we can do it again soon.
Okay, Chris. Thank you very much. Thank you, team, for a great week. Nice trading on your patterns in play, all green coming into it. Oh, Chris, are you still there? There was one question.
Yes.
Do you mind revealing the name of the guy that taught you from South Africa? Because we have some South Africans in here.
He's an underground. He's a guy in the underground. I can't really reveal his name. He's an underground guy.
Well, thank you for popping out again from the underground to be with us, Chris. Have a great weekend.
Thanks a lot.
All right, and Face community, have a great weekend. Remember, don't just count your pips, count your blessings. Looking forward to next week. Enjoy your weekend. Adios, everybody. You're very welcome. You're very welcome, guys. You're welcome, Donnie, George, Jacques. See you Monday.